Welcome back to the AI Daily Brief Headlines Edition, all the daily AI news you need in around 5 minutes. We kick off today with the latest scuttlebutt around the China-US AI battle. Specifically, we have some very interesting comments from Nvidia CEO Jensen Huang, who, when pointedly asked how far behind China was, basically said they're not.
How far behind do you think China is?
China is not behind. China is right behind us. I mean, we're very, very close. But remember, this is a long-term, this is an infinite race. In the world of life, there's no 2-minute, end of the quarter, there's no such thing. And so we're going to compete for a long time. And just remember that this is a country with great will, and they have great technical capabilities. 50% of the world's AI researchers are Chinese. And so this is an industry that we will have to compete.
So these are pretty stark comments. I mean, usually I just read them, but the sincerity with which he says they're not behind, I think, is part of what has really captured people's attention. Now, of course, there is context for these comments. I've shared before the back and forth between Nvidia and the Trump administration on chip export restrictions. Basically, the restriction of the H20 chips seems like it came as a surprise to Nvidia. Now, for his part, Jensen is definitely playing the US political game. The company recently announced that it plans to build $500 billion in AI infrastructure in the US over the next 5 years, a move which President Trump has loudly applauded. At the same time, Nvidia is racing to minimize losses from these new rules by getting chips out before the rules go into effect. Moving over to other tech giants, we are in earnings season right now, which is always a good chance to get a pulse of what's going on. Microsoft's earnings yesterday were solid. Microsoft grew revenue at a 13% pace with a 33% annualized gain for their Azure cloud division. CFO Amy Hood guided that this stellar cloud growth would continue, forecasting a 35% pace for the current quarter. At the same time, she warned that the company expects to run into capacity constraints by June, stating, "We had hoped to be in balance by the end of Q4, but we did see some increased demand as you saw throughout the quarter. So we're going to be a little short, a little tight as we exit the year." Here she's referring, by the way, to Microsoft's fiscal year, which is currently in Q4 and ends in the summer. Now, all of this comes after Microsoft reportedly canceling several data center leases and slowing down major AI infrastructure projects. The company insists that these 2 points are not necessarily related, with Hood reiterating the commitment to invest $80 billion into data centers this year. Based on the reporting, there wasn't a clear sense of the scale of the cancellations, but they did seem to be somewhere between marginal and moderate rather than a gutting of AI spending. Hood reminded investors that it takes time to pour concrete and rack hardware, adding, "These are very long lead time decisions from land to build out. It can be lead times of 5 to 7 years, 2 to 3 years. So we're constantly in a balancing position as we watch demand curves." The way that the Earnings Whispers account summed it up was this: "The death of our AI capex has been greatly exaggerated. The reality is we are just balancing things like we always do. You're just paying more attention to it now." Meanwhile, Meta is telling a different story, committing and doubling down once again on the AI infrastructure build-out, whatever the costs. They're in a pretty good position to do that because Wednesday's earnings saw steady revenue growth and a slight beat on estimates. On the earnings call, CEO Mark Zuckerberg said that he isn't concerned about an economic downturn harming the advertising business, stating, "We're well positioned to navigate the macroeconomic uncertainty." At the same time, the tariffs have led the company to rethink how they approach AI expenditure for the year. Meta had already committed to spend between $60 and $65 billion on AI infrastructure, which was a big jump from last year's spending, and the company is now guiding that the final figure will be in the range of $64 to $72 billion due to the trade war. CFO Susan Lee said, "The higher cost we expect to incur for infrastructure hardware this year really comes from suppliers who source from countries around the world, and there's just a lot of uncertainty around this given the ongoing trade discussions." She added that Meta is working to mitigate that impact by, quote, "optimizing our supply chain." Meta is now set to spend more on infrastructure than they have in the past 2 years combined. And while previous boosts to Meta's spending have caused Wall Street to squirm, this round of earnings seemed to be well received. The stock was up 6% in overnight trading following the report. Andrew Rocco, a stock strategist at Zacks Investment Research, said that increased AI spending is now seen as a positive indicator. Zuckerberg also presented the releases from this week's LlamaCon in a positive light, noting that WhatsApp is the primary way that people around the globe access Meta's AI assistant, but that platform isn't the dominant messaging app domestically, saying, "So I think the Meta AI app as a standalone is going to be particularly important in the United States to establishing leadership." Lastly today, rounding out this big tech catch-up theme, Google is close to striking a deal to bring the Gemini assistants to iPhones, at least according to CEO Sundar Pichai, who was on the stand at the Google antitrust trial. Pichai said that he expects to close the Apple deal by the middle of the year and integrate Gemini into the iPhone ecosystem before year's end. Presumably, the integration will allow Siri to call on Gemini the same way it currently punts complex queries and writing tasks to ChatGPT. Apple SVP Craig Federighi had hinted at this integration last year when Apple Intelligence was first unveiled, stating, We want to enable users ultimately to choose models they want, maybe Google Gemini in the future. The discussion came out of cross-examination of the CEO. Pichai acknowledged negotiations with Apple CEO Tim Cook, saying he was trying to understand our plans for how we're evolving AI technologies, our roadmap, and as part of that, we talked about the Gemini app distribution as well. Is this yet one more piece of evidence that Apple is giving up the ghost and saying they can't develop their own AI? We'll just have to wait and see. For now, that's going to do it for today's AI Daily Brief Headlines edition. Next up, the main episode.